Hello traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, 17th day of July, 2017, and this is the daily report for gold and silver. Nice follow-through buying in the precious metals markets today after a significant rise on Friday, really propelling gold and silver prices, I believe, dramatically higher, but more importantly, really giving us technical confirmation of a key reversal. Yesterday, about an hour into the opening, or I should say after the opening, we did send out a special trade alert. We recommended going long both gold and silver. We'll talk about the specifics of that trade when we pull up our technical studies. Now, gold did close up about 0.5% higher on the day, $1233.50. And that's up $6 basis the most active August. Our recommendation was to go into the October. Again, we'll fill you in on the details when we pull up our first charts. Silver, nice, tremendous upside move, gaining about a full percentage today, and more importantly, closing just at around $16 on the day, up about 15 cents. Today's upside move in the precious metals is certainly a continuation of what began last week as a slow and methodical rise from recent lows, and then built steam up until Friday when we saw a double-digit move in gold, trading well over $10 higher on the day and closing effectively above $12.24, which is what I believe our current level of support is at. And that level of support, of course, is based on a 78% retracement, and it is a 78% retracement of this last correction, this $100 correction here. We did send out a special trade alert yesterday about an hour after the market opened, and traders taking that call, our recommendation was to trade the October contract, which was at that time at $1232.70, up about $1.70 on the day. That market is up about $5 to $6 from where we entered, as well as our recommendation to enter the September silver contract, which was trading at $5.98, which is now well over $16 per ounce. In terms of what we're looking at, I believe that we have now seen momentum shift. We absolutely got our key reversal, and I believe that our next level of support should be based upon this 200-day moving average, which gold pricing has effectively broken above. And I've just gone ahead and pulled up the October contract. The reason I wanted to trade this out into October is the most active August position will come into first notice day in about a week. That would be the third week of July. And so for that reason, I believe that this trade is a trade that we could be in for well over a couple of weeks if in fact we have caught the beginning of a key reversal, which is what I believe we have. My upside target right now is a minimum of about $12.60. Now, we entered the market at $1232.70. Market is currently trading at $1238.20, up $7.20 on the day. We do have stops in the market, and our current stops are just below $12.10. I wanted to put them really effectively under this low so they would be down here. And I will look to raise them rather quickly if, in fact, the market continues this rise that we're witnessing today. And traders, as I spoke about last week, on this particular trade, I did make a recommendation not only to go long gold, but also to go long silver. Traders taking that call are trading the September contract. They got in roughly at $15.98, just below $16 per ounce. That would be right in here. Market right now is currently trading at $16.12, a net gain today of about 1% or a 18-cent rise on the day. We got in with a good portion of that. Your stop should be below $15.50. So what I'm attempting to do in terms of stop placement is keep it below the lows that were achieved on Friday as this market moved up. The other thing you can see that I believe is significant is that when we looked at gold, we saw that it had broken above the 200-day as well as 50-day moving average. Now, in the case of silver, you actually have the 50-day moving average below the 200-day moving average because of the significant pressure that was put on the market as this market traded under pressure on this last corrective period. And so for that reason, we would need to see really the shorter term, this 50-day moving average break back above the 200-day. That, of course, would be a golden cross. In terms of different levels that we're looking at, I currently am pegging support in silver at about 1590. And I am putting resistance in silver, major resistance, based upon this particular bottom right here at about 1630. Traders, my recommendation is to maintain your current long position, maintain your current stop, maintain your current silver position, as well as your current stop. In other markets that we follow, very, very muted action really across the board in equities as well as the dollar. We had the dollar in essence unchanged, Dow closing off just a little bit, NASDAQ up a little bit, and the Standard & Poor's in essence unchanged. So traders, we are looking at the dollar index. Dollar index in essence unchanged on the day. We do have an absolute pure doji right now. You can see that in white. It's not red nor green. Net change is 0.000. Now it's up 0.005. So we're talking about fractional moves. Dollar index currently at 94.93. I do believe that we do not have a major level of support in the dollar index until it gets to 94. And traders, extremely quiet day in U.S. equities. Dow Jones Industrial at 21,636, putting it down about a point. We're talking about a fractionally unchanged day. When we look at the NASDAQ Composite, that is trading unchanged in essence at 6310. And then lastly, the S&P is pretty much doing the same. And as we look at it, we can see that it's down 0.03%. Again, fractionally unchanged, really sitting near the most recent highs. Now, there's still about an hour left in trading to go, and should the market close in positive territory, both the S&P as well as the Dow Jones Industrial Average would be closing at a new record high. Any upside move is a new all-time record high in those markets. And traders, lastly, do want to take a look at crude oil. Crude oil is trading off by about 50 cents per barrel, off a little bit over a full percent at 46.04, and that is coming on the heels of last week's trading activity that did take it higher. We're looking at a weekly chart, and we can see the move started just at around $44 per barrel and traded over $46 per barrel, currently at 46.03. My sense is that we will run into some resistance, but this to me is our critical level of support, which is roughly at 46, and simply based upon these lows here. But I do believe that there could be more significant downside pressure in crude oil, and over, let's say, the next month or so, I wouldn't be surprised to see it go to roughly $41 per barrel. As we talked about during our technical studies, we firmly got our stop in place, and I do believe that we have caught a key reversal in the marketplace. And because of the dramatic change in market sentiment that we really witnessed last week, and that of course was due to two primary factors, a soft data coming in and testimony by Janet Yellen in which her tone and stance was much more dovish than in previous sessions and statements, we have, I believe, a key reversal and a shift of market sentiment from that of being bearish on the precious metals to being bullish. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.